Welcome back to Talk Tickers, your go-to for all things earnings calls.
That's right. We break them down so you don't have to.
And today we're diving deep into Twilio's Q4 2024 performance.
And let me tell you, there's a lot to cover.
Oh yeah, this is a big one. Lots to unpack here.
Big story here is transformation.
And a company really focusing in on profitability.
Alongside all that innovation they're known for.
So first things first.
Let's hit those headlines.
Twilio crushed expectations.
Absolutely crushed it.
Pulling in a record $1.195 billion in revenue.
That's 11% growth year over year.
And their second consecutive quarter of double-digit growth.
Which is impressive in this market.
But here's the real shocker.
The big news everyone's talking about.
They achieved GAAP operating profitability.
For the first time ever.
Talk about a milestone.
A huge milestone.
And they didn't just hit it.
They blew past it.
Exceeded their initial target.
It really highlights the success of their strategic shift.
Over the past 2 years, right?
Yeah, focusing on balancing
innovation, growth, and profitability.
They're not just growing.
They're growing smarter.
And more sustainably.
And they're still innovating like crazy.
251 new products, enhancements, and services in 2024 alone.
I mean, that's just wild.
It's not just about quantity, though.
It's about building a platform for the future.
Future-proof, absolutely.
They're aiming for a platform that's not just powerful,
but also
trusted, simple, and smart.
Enabling those seamless, personalized customer experiences
that everyone's looking for.
That everyone wants, yep.
And you can see this commitment to reliability.
Oh, absolutely.
In their performance during Cyber Week.
Huge test for any company.
They handled over 5 billion messages.
Delivered more than 65 billion emails.
Supported 678 million calls.
And all while maintaining 100% uptime.
That's incredible.
That's the stability businesses need.
Especially during those peak periods.
Absolutely mission critical.
Speaking of huge trends.
The big one, everyone's talking about it. It's everywhere these days.
It's clearly becoming a central force.
In Twilio's strategy, for sure.
I mean, get this.
Okay, hit me.
90% of those top-tier AI startups.
We're talking the Forbes 50 list.
Are already building on Twilio's platform.
That's a serious vote of confidence.
It's pretty mind-blowing.
Really is.
And what's so cool is that Twilio's AI-enabled products.
They're not just hype.
They're delivering real, tangible results.
Real-world impact.
They gave this example.
Okay.
One company using their predicted audiences feature.
I've heard good things about that.
Saw a 70% improvement in audience accuracy.
That's huge.
That kind of precision can make or break a campaign.
Absolutely.
And it's not just about those big companies.
There's a whole ecosystem growing around this.
There are these amazing emerging AI startups.
So cool to see what they're doing.
Like Paradox.ai.
Yeah, they won a Twilio AI Searchlight Award.
They're using Twilio's conversational AI.
To totally revolutionize recruitment.
They're helping giants like McDonald's, SAP.
Huge names.
Schedule interviews in minutes.
A process that used to take days.
It's amazing.
It's mind-blowing how AI is transforming industries.
Now let's shift gears a bit.
Okay, where are we going?
Let's talk about Segment.
Their customer data platform.
The revenue was actually down a bit year over year.
Slightly down, yeah.
But don't panic.
Not yet, at least.
Their go-to-market strategy is actually showing strength.
Bookings accelerated slightly year over year.
And here's the promising part.
This is the good stuff.
Over half of these new bookings are multi-year deals.
That's key.
That means a more predictable revenue stream.
More stability, definitely a good thing.
So even though Segment might seem like a bit of a soft spot,
on the surface, maybe.
It's actually got some really encouraging signs for the future.
Definitely some positive signals there.
Looking ahead, Twilio is all about that durable, long-term growth.
It's all about the long game.
Continuing to expand those margins.
And boosting free cash flow.
They're shooting for double-digit growth over time.
Ambitious but achievable.
And their 2025 organic revenue growth guidance?
Let's hear it.
Is projected at a healthy 7% to 8%.
Solid numbers.
Okay, now for the fun part.
I love this part.
This is not financial advice segment.
Where we let our imaginations run wild.
We throw out a wild, maybe brilliant trade idea.
This is pure speculation, folks.
Just for fun, don't base your investment decisions on this.
Definitely not financial advice.
Okay, here we go. Buckle up.
Hit me.
What if Twilio becomes the Switzerland of the AI wars?
Interesting. Tell me more.
Imagine the tech giants.
Microsoft, Google, Amazon.
Battling it out for AI supremacy.
It's already happening.
And Twilio's just sitting there.
Okay.
Playing the role of the neutral platform.
Switzerland. Got it.
They don't pick sides.
We're above the fray.
They just provide the tools and infrastructure.
That everyone needs, yeah.
They're already deeply integrated with all those major players.
Sure.
And this commitment to neutrality
It's a powerful position.
could make them even more appealing
To companies that are wary of getting locked in.
to any one ecosystem, right?
Sure.
As AI adoption explodes
And it's just getting started.
and the tech giants' rivalry heats up,
Things are going to get intense.
Twilio's demand could skyrocket.
I could see that happening.
Revenue through the roof, profitability soaring.
And who knows?
Maybe the stock price takes a trip to the moon.
Okay, maybe not the moon.
But you get the idea.
It's a bold bet.
But that's what this segment is all about.
Thinking big, exploring those possibilities.
Exactly. And that wraps up our
This is not financial advice.
segment.
Remember, folks, pure speculation.
Now, let's take a closer look at Twilio's Q4 performance,
Sounds good. Let's break it down.
starting with their revenue breakdown.
Okay, let's see how they did.
Their communications business brought in a solid $1.121 billion.
That's a 12% increase year over year.
Clearly, their core offerings are still a major driver.
Absolutely.
What were some of the key factors there?
Well, messaging revenue accelerated for the second quarter in a row,
That's good momentum,
and email performance remained strong.
especially with the holiday season and Cyber Week.
Yeah, all that online shopping.
And speaking of Cyber Week,
A true test of their platform.
they handled over 5 billion messages
Delivered over 65 billion emails.
and supported 678 million calls.
While maintaining a 100% uptime,
Incredible.
shows the robustness of their platform.
And they even got a little boost from political activity,
Oh yeah, election season.
added about 0.6% to their reported growth.
Always interesting to see those external factors come into play.
But to be fair,
They look at both sides.
there was a 0.4% headwind from phasing out that ZipWhip software.
Right, which is now fully lapped.
Okay, so we've covered communications.
What about segment?
Let's dig deeper there.
Okay, let's see the numbers.
They brought in $74 million in revenue.
Down 1% year over year.
We touched on this earlier, but why the dip?
Well, remember their bookings were actually up slightly.
Right, bookings were positive.
So the revenue dip is more about timing.
And the structure of those contracts?
A lot of those new deals are multi-year,
So the revenue gets recognized over time.
leading to a more stable revenue stream long term.
So segment is on the right track, even if the current revenue.
Doesn't quite reflect that yet.
Okay, good to know.
Now, let's talk profitability.
All right, let's dive in.
This is where it gets interesting.
Twilio achieved a record non-GAAP gross profit of $621 million.
That's up 10% year over year.
Not bad at all.
Their non-GAAP gross margin was 52%.
Down slightly both year over year and quarter over quarter.
We should probably unpack what caused that dip.
Yeah, what drove that?
Mainly higher hosting costs during Cyber Week.
Makes sense. They had to handle all that traffic.
They had to ramp up their infrastructure,
And they also had a higher revenue mix from messaging.
which typically has lower gross margins.
Okay, so that explains the dip.
But if we look at the big picture,
Zoom out a bit.
they still delivered a record non-GAAP income from operations,
Of $197 million.
which is up 14% year over year.
They're effectively balancing growth with profitability.
Exactly what they've been aiming for.
And they're doing it while driving down their net burn rate.
And reducing their outstanding share count.
All positive signs for investors.
Definitely signals a focus on creating sustainable value.
Now, let's look at that non-GAAP operating margin.
A key metric for sure.
It was 16.5% for Q4.
Up both year over year and sequentially.
Shows their commitment to operating leaner.
And smarter.
And of course, we can't forget the big news.
The headline.
They achieved GAAP operating profitability.
For the first time ever.
A huge milestone.
A sign of their ability to execute on their plan.
Now, let's break down the performance of their two main units.
Communications and segment.
In terms of non-GAAP income from operations,
Okay, let's see how they stack up.
the communications unit had a stellar quarter.
Pulling in $275 million.
And for the full year 2024,
Get this.
they generated over $1 billion.
That's impressive.
Talk about a cash cow.
Now what about segment?
Well, Segment had a non-GAAP loss from operations of $10 million.
Okay, not profitable yet.
But the good news is
There's always good news.
their losses actually improved sequentially.
Thanks to better gross margins and cost discipline.
They're on track to hit break even by Q2 of this year.
So definitely heading in the right direction.
All right, let's talk about stock-based compensation.
Another important metric for investors.
It was 13% of revenue for Q4.
Down both quarter over quarter and year over year.
They're really demonstrating discipline here.
Trying to reduce their reliance on stock-based compensation.
which is a positive sign.
Shows they're focused on creating shareholder value.
And speaking of creating value,
Let's talk free cash flow.
they generated $93 million in Q4.
Down sequentially.
What caused that dip?
Well, they made some significant vendor prepayments in Q4.
Around $130 million.
It's a strategic move to secure better terms,
Might impact free cash flow short term.
but benefits them in the long run.
So a bit of a trade-off.
But for the full year 2024,
They still generated $657 million in free cash flow.
an 81% increase year over year.
That's a healthy amount of cash.
And it represents a free cash flow margin of 14.7%.
Up a whopping 600 basis points year over year.
Talk about efficiency.
Now let's shift gears to Twilio's guidance.
For Q1 and the full year 2025,
They're feeling confident.
but also being realistic.
They're projecting revenue between $1.13 billion and $1.14 billion for Q1.
Representing 8-9% year-over-year growth.
A slight slowdown from Q4.
But there's seasonality to consider.
And the impact of that political revenue,
For the full year
they're maintaining their organic revenue growth guidance.
of 7-8%,
Still a solid pace.
they're also projecting non-GAAP income from operations.
Between $180 million and $190 million for Q1.
So continued profitability.
And for the full year.
They're projecting between $825 million and $850 million.
Okay, so consistent profitability throughout the year.
What about free cash flow?
Well, they're expecting a hit to free cash flow in Q1
Oh, what's happening there?
due to a $120 million payment
Okay.
for their company-wide catch bonus program.
That's a significant amount.
They implemented this program in 2024.
To reduce reliance on stock-based compensation,
So it's a one-time expense,
impacting Q1.
but ultimately part of a broader strategy.
They're still expecting strong free cash flow for the rest of the year,
And they're maintaining their full-year guidance.
between $825 million and $850 million.
So overall, Twilio's guidance reflects a balanced approach.
To growth and profitability,
They're investing.
but doing it responsibly.
Now, let's dig into the Q&A portion of the call.
Always interesting to hear what the analysts are asking
They had some good questions.
about Twilio's growth drivers
And the performance of different segments.
and their strategy for the future,
One analyst wanted to know about Twilio's growth
specifically in messaging and email.
and how much of it was tied to crypto.
Crypto, always a hot topic.
Was it a major driver?
Not really.
So crypto's a factor, but not a major one.
Their growth is much broader.
Coming from a variety of industries.
And use cases.
Another analyst dug into segment,
Specifically asking about their deferred revenue.
trying to understand if segment is turning a corner,
Both the reported and remaining performance obligations
which reflect future revenue.
were significantly driven by segment.
So there's definitely positive momentum there.
But what's driving that growth?
Two things.
Hit me.
Bookings growth, meaning they're closing more deals,
Okay, that's good.
and a higher percentage of multi-year deals.
So they're locking in revenue for longer.
Now, one analyst pointed out the growth of Twilio's high-end customers.
The ones spending over $1 million annually.
What's driving that strength?
It's a mix of new customers and expansion within existing ones.
But what's interesting is
I love these insights,
these larger customers are seeing the value of using multiple products.
especially when it comes to combining communications and data.
So it's about selling solutions, not just products.
Absolutely.
Then, of course, there was the question about the macro environment.
Top of mind for everyone these days.
How is Twilio seeing it impacting their business?
They're operating in a dynamic market,
But they haven't seen any major changes yet.
so cautiously optimistic.
They're planning for a neutral macro environment.
Meaning no sudden rebound, but no major downturn either.
Seems like a sensible approach.
Lets them focus on their strategy while staying flexible.
Now, let's talk AI.
Everyone wants to know about AI.
One analyst asked about the revenue generated from AI customers.
Makes sense, they have a lot of them.
It's still early days.
In terms of revenue,
Some of these customers are still small,
others are experimenting,
so the revenue impact isn't huge yet.
but it's a strategic focus.
Absolutely.
And they have that early mover advantage.
Which could pay off big time.
Now, what about voice AI?
Another analyst wanted to know about use cases there.
And how Twilio plans to differentiate themselves,
Voice AI is getting really popular.
especially with those consumer-facing platforms.
So where does Twilio fit in?
Their focus is on providing tools for businesses.
To create their own custom voice AI solutions.
They're not trying to compete with Siri or Alexa.
They're empowering businesses.
To leverage voice AI in a tailored way.
They gave an example of a customer using voice AI for their IVR system.
That's a great use case.
It creates a more personalized experience.
Okay, let's talk about their dollar-based net expansion rate.
ABNER.
It hit 108% in Q4.
That's a really strong number.
Shows their ability to grow revenue from existing customers.
One analyst asked about the drivers of that improvement.
Whether it was retention or cross-selling,
It's actually more about expansion.
their churn rates have been historically low.
So they're selling more to their current customers.
That's what's driving that DBNER growth.
Another analyst wanted to know more about their cross-selling strategy.
How are they getting those single product customers?
To adopt more products,
They're focusing on making it easy,
showcasing the value of combining products.
like SMS and email or SMS and voice,
They're also aligning their sales incentives.
to encourage cross-selling.
Now, one analyst brought up gross margins
They can fluctuate.
based on seasonality and product mix
They wanted to know if Twilio was confident.
in delivering margin expansion.
They acknowledged that gross margins can be volatile too.
So what's their outlook
They're actually planning for relatively flat gross margins,
over the next few years,
but they had those 2027 operating margin targets.
which assume constant gross margins,
So they're focusing on other levers to improve margins.
like cost discipline and efficiency.
Right.
One analyst asked about those vendor prepayments.
The ones that impacted free cash flow.
They wanted to know how often to expect those,
Twilio clarified that they're more episodic
driven by opportunities.
to secure better terms,
So not something we'll see every quarter.
or even every year.
Now let's talk about AI agents.
I love how companies are using AI internally.
One analyst asked about Twilio's own use of AI agents.
Where are they seeing the most success?
Well, first, in customer support,
Handling those incoming inquiries.
improving their ticket deflection rate.
So less need for human intervention.
And second, for their sales development reps,
AI agents vetting those inbound leads.
and making sure the reps are focusing on the best ones.
Exactly.
Okay, one final question from the Q&A.
Let's hear it.
It's about RCS,
Rich communication services.
the next generation of SMS messaging.
The analyst wanted to know about Twilio's progress there.
RCS has been slow to take off.
But it's starting to gain traction.
Twilio is seeing encouraging signs,
They're excited about the potential,
but there are challenges.
like interoperability.
Not all carriers and devices support it yet,
But they're ready to support customers who want to explore it
especially those who want to leverage the branded nature of RCS.
for more engaging messaging
So RCS could be a big opportunity for Twilio
down the line
as adoption grows.
and the technology matures.
All right, that wraps up our deep dive,
Into Twilio's Q4 2024 earnings call,
for this part at least.
we covered a lot of ground today.
From financials and strategy,
To their plans for future growth.
join us next time as we continue to explore.
What Twilio's performance means for investors. Welcome back to Talk Tickers.
We're continuing our deep dive into Twilio's Q4 2024 earnings call
So far, we've unpacked their strong financial results
and their strategic moves in areas like AI.
and customer engagement.
And let's shift gears a bit.
Okay, where are we headed?
Let's look at what this all means from an investor's perspective
Sounds good. Let's put on our investor hats.
and try to understand what this earnings call is really telling us.
All right, investor hats on. What are the key takeaways here? What should investors be paying attention to?
Yeah, what should investors be watching?
Well, for me, the biggest takeaway is their commitment to profitable growth.
Yeah, that definitely came through loud and clear.
They're not just chasing revenue at all costs.
They're focused on building a sustainable and efficient business.
Exactly. And hitting GAAP operating profitability ahead of schedule.
That's a huge statement.
It shows they're serious about putting their money where their mouth is.
Walking the walk, not just talking the talk.
And they're not stopping there. They're projecting continued margin expansion.
And strong free cash flow generation in the coming years.
Music to investors' ears, especially in this economic climate.
Absolutely. Companies are being scrutinized for their financial discipline.
And Twilio is showing they have the resilience and the foresight to weather any storm,
They're proving they can adapt and thrive.
which is exactly what investors are looking for.
Another key takeaway, in my opinion, is Twilio's strategic positioning.
At the heart of the AI revolution.
It seems like they're really going all in on AI.
They're building their platform to be the foundation for AI-powered customer experiences.
And it's not just talk. The fact that 90% of those top AI startups
The ones on the Forbes 50 list.
are already building on their platform
It speaks volumes about their credibility.
and the potential of their technology.
It's a smart move.
Yeah.
AI is only going to become more important.
More integrated into our lives.
And Twilio is setting themselves up to be a major player.
And it's not just those small startups.
Right. They're winning over big enterprises, too.
They highlighted some impressive customer wins during the call.
Absolutely. That broad reach across both startups and enterprises.
It gives them a diverse customer base, which is great for their long-term growth.
Okay, so we've talked about the positives, but let's be realistic here. No investment is without risk.
Right. There are always challenges.
So what are some of the potential headwinds that investors should be aware of?
What are the things that could trip them up?
Well, competition is always a factor. The customer engagement market is crowded.
There are a lot of players vying for a piece of the pie.
Twilio is the leader, but they can't afford to get complacent
They need to keep innovating.
and finding ways to differentiate themselves.
What else?
The macro environment is another potential risk. We touched on it earlier.
But it's worth emphasizing.
A prolonged economic slowdown could really impact customer spending.
And slow down Twilio's growth.
They're planning for a neutral macro environment,
But things can change quickly.
and their usage-based revenue model means they're exposed to those fluctuations in customer activity.
So it's something to keep an eye on for sure.
And then there's Segment.
Right, their customer data platform.
It's showing signs of improvement.
But it's still lagging behind their communications business.
In terms of revenue growth and profitability,
Investors will want to see them turn Segment into a more consistent engine for growth.
absolutely. Okay, so we've got competition, the macro environment, and Segment to keep in mind.
Anything else?
Oh, we can't forget about valuation.
Twilio stock has been on a bit of a roller coaster ride.
Up and down over the past couple of years.
That's the outlook now.
Well, despite that volatility, Twilio is still a high-growth company.
With a strong market position and a compelling vision.
Their focus on profitability is definitely starting to resonate with investors.
And their bet on AI could unlock significant value down the road.
But valuation is always subjective.
Some investors might see it as overvalued, others might see it as a bargain.
It really depends on your individual investment horizon, your risk tolerance, and your assessment of their long-term potential.
What about those share buybacks?
Ah, yes, the buybacks.
Twilio has authorized a $2 billion share repurchase program.
That runs through the end of 2027.
That's a significant move.
It suggests that they believe their stock is undervalued,
And they're putting their money where their mouth is.
showing their commitment to returning value to shareholders
Buybacks can boost earnings per share.
and increase the value of those remaining shares.
It's a good sign for investors.
So what's the bottom line for investors?
What should they be taking away from all of this?
I think it's clear that Twilio is a company in transition
They're evolving from a high-growth, high-burn business.
into a more mature, profitable, and sustainable enterprise.
It's a journey,
And there will be bumps along the way,
but they're making progress.
demonstrating a commitment to creating long-term value.
Their focus on profitability, their embrace of AI, and those share buybacks.
All very positive signals.
Investors who believe in their long-term vision
And are comfortable with some level of risk.
might see this as a buying opportunity.
A chance to get in on a company that's well-positioned for the future.
So we've got this big picture view.
Now let's break it down a little further.
What are some of the specific metrics investors should be watching closely?
Well, revenue growth is always key. It's a fundamental indicator of a company's health.
And Twilio delivered impressive growth in Q4,
11% year over year,
and they're projecting continued growth.
with a full-year organic revenue growth guidance of 7% to 8% for 2025.
Investors will want to see if they can maintain that momentum.
Especially given the uncertain economic environment.
They'll also be looking for signs that Segment is contributing more to that overall growth.
Absolutely. That's an important piece of the puzzle.
And then there's profitability.
Always top of mind for investors.
Twilio achieved a major milestone.
Hitting GAAP operating profitability for the first time.
It's a big deal, and investors will want to see them sustain that.
They'll also be looking at metrics like non-GAAP operating margin, gross margin, free cash flow margin.
To assess their efficiency and profitability over time.
Speaking of cash flow, they generated $657 million in free cash flow in 2024.
That's a healthy amount.
It gives them flexibility to invest in growth, make acquisitions, return capital to shareholders.
Investors will want to see if they can keep up that strong cash flow performance.
And then there's valuation.
We talked about how it's subjective.
But there are key metrics that investors use to assess how Twilio is priced.
Relative to its peers and its historical performance.
Metrics like price-to-earnings ratio, price-to-sales ratio.
Enterprise value to EBITDA ratio.
These can provide some insights
Investors might also use discounted cash flow analysis.
To estimate Twilio's intrinsic value based on their projected future cash flows.
It's all about putting the pieces together.
Forming your own assessment of whether Twilio is the right investment for you.
Okay, so we've covered a lot of ground here, analyzed their performance, discussed what it means for investors.
But you know what's missing.
What's that?
The talk tickers, this is not financial advice segment.
Oh, right. Time to let loose a little.
Brainstorm some outlandish, crazy, but maybe brilliant trade ideas.
Remember, everyone, this is purely for entertainment purposes.
Don't make any investment decisions based on our wild speculations.
Okay, ready for my pitch?
Hit me with it.
What if Twilio becomes the Switzerland of the AI wars?
Okay, I like where this is going.
You've got Microsoft, Google, Amazon, all those tech giants.
Locked in an epic battle for AI dominance.
And Twilio's just sitting there,
neutral
providing the infrastructure and tools that everyone needs.
to build and deploy their AI solutions.
They don't pick sides.
They're Switzerland.
Exactly. And they're already deeply integrated with all those major players.
It's true, they've got their fingers in every pie.
And that commitment to neutrality
Can make them even more attractive.
to companies that don't want to get locked into any one ecosystem.
That's a really interesting angle.
As AI becomes more and more integrated into everything we do,
And those tech giants keep battling it out.
Twilio's demand could go through the roof.
I can see it now. Revenue skyrocketing, profits soaring.
Maybe even the stock price taking a little trip to the moon.
Okay, maybe not the moon, but you get the idea.
It's a bold bet.
But hey, that's what this segment is all about.
Thinking big, exploring those crazy possibilities.
Pure speculation, just for fun.
Okay, and that wraps up our This Is Not Financial Advice segment.
Now let's take a step back from those wild speculations.
And dive a bit deeper into some of the specifics from this earnings call.
Sounds good. Let's start with a closer look at their revenue breakdown.
Their communications business brought in $1.121 billion in Q4.
That's a 12% increase year over year.
Clearly, their core communications offerings are still a major driver of their success.
What were some of the key factors behind that growth?
Well, messaging revenue saw a nice acceleration for the second quarter in a row.
Okay, that's a good sign.
And email performance remained strong, fueled in part by the holiday season.
All that online shopping during Cyber Week.
Yeah, Cyber Week was a big one for them. They handled over 5 billion messages, delivered over 65 billion emails.
And supported 678 million calls.
All while maintaining 100% uptime.
That's really impressive. It shows how reliable and scalable their platform is.
Which is so important for businesses during those peak periods.
They even got a little boost from political activity.
Right, which added about 0.6% to their reported revenue growth.
Always interesting to see those external factors come into play.
But to be fair, it's worth noting that this was partially offset by a 0.4% headwind.
From phasing out the software component of their Zipwhip business, which has now fully lapped.
Okay, so we've got communications covered. What about segment?
Let's dig into that a bit more. They brought in $74 million in revenue for Q4.
Which was down 1% year over year.
Right. We talked about this earlier, but it's worth revisiting. What's the story there? Why the dip?
Yeah, what's going on with segment?
Well, remember, their bookings were actually up slightly year over year.
Okay, so their bookings are positive.
The revenue dip is more a reflection of timing.
And the structure of their contracts.
Exactly. A lot of those new deals are multi-year, so the revenue gets recognized over a longer period.
So would you say that segment is on the right track?
I think so, even if the current revenue numbers don't fully reflect that.
Okay, good to know.
Let's move on to profitability.
Twilio achieved a record non-GAAP gross profit of $621 million in Q4.
That's a 10% increase year over year.
Pretty impressive.
Their non-GAAP gross margin landed at 52%.
Which was down slightly both year over year and quarter over quarter.
It's always good to understand what's driving those margin fluctuations.
So what caused the dip this time around?
Higher hosting costs during Cyber Week.
Okay, that makes sense. They had to handle all that extra traffic.
They had to ramp up their infrastructure, which can impact margins.
And they also had a higher revenue mix from messaging.
Which typically carries lower gross margins than some of their other products.
So that explains the dip. But if we zoom out and look at the bigger picture,
they still achieved a record non-GAAP income from operations of $197 million.
which is a 14% jump year over year.
It's a solid performance, especially considering those headwinds.
So they're doing a good job of balancing growth with profitability.
That seems to be a key focus for them.
Let's look closer at that non-GAAP operating margin. It was 16.5% for Q4.
Up both year over year and sequentially.
It really shows their commitment to operating more efficiently.
And of course, we can't forget that they hit GAAP operating profitability for the first time ever.
That's a major milestone in their journey.
Absolutely. Let's break down the performance of their two main business units.
Communications and Segment.
In terms of non-GAAP income from operations.
Okay, how did each unit perform?
The communications unit had a standout quarter.
Pulling in $275 million.
And get this, for the full year 2024, they generated over $1 billion in non-GAAP income from operations.
Wow, that's a serious cash cow. What about Segment?
Segment had a non-GAAP loss from operations of $10 million in Q4.
Okay, so not profitable yet. What's the outlook there?
Well, their loss has actually improved sequentially thanks to better gross margins and continued cost discipline.
That's encouraging.
And they're on track to hit break-even non-GAAP income from operations by Q2 of this year.
Okay, so moving in the right direction.
Absolutely. Now let's talk about stock-based compensation. It was 13% of revenue for Q4.
Which is down both quarter over quarter and year over year.
They're definitely trying to reduce their reliance on stock-based compensation.
Which is a positive sign for investors.
It shows a commitment to managing dilution and creating value for those shareholders.
Speaking of creating value, what about free cash flow?
They generated $93 million in Q4.
Which was down sequentially. Why was that?
They made some significant vendor prepayments in Q4.
Totaling around $130 million.
It's a strategic move to secure better terms and pricing from those key vendors.
So it might impact their free cash flow in the short term, but it'll benefit them in the long run.
Exactly. For the full year 2024, they still generated $657 million in free cash flow, an 81% increase year over year.
That's impressive.
It translates to a free cash flow margin of 14.7%, up 600 basis points year over year.
Wow. They're not just generating more cash, they're doing it more efficiently.
It really highlights their evolution into a more efficient and profitable company.
Okay, let's talk guidance. They're projecting revenue between $1.13 billion and $1.14 billion for Q1.
Which represents 8-9% year-over-year growth.
So a bit of a slowdown from Q4.
But that's partly due to the typical post-holiday seasonality.
And the impact of that political revenue bump we talked about earlier.
They're also projecting non-GAAP income from operations between $180 million and $190 million for Q1.
So expecting to remain profitable.
And for the full year, they're projecting non-GAAP income from operations between $825 million and $850 million.
So continued profitability throughout the year. That's good news for investors.
What about free cash flow?
They're expecting a hit to free cash flow in Q1.
Due to a $120 million payment related to their company-wide cash bonus program.
That's a pretty big hit. What's that about?
Well, they implemented this program last year as part of their efforts to reduce reliance on stock-based compensation.
So it's a one-time expense.
That will impact Q1 free cash flow, but it's ultimately part of a broader strategy.
To improve their financials.
And despite that one-time hit, they're still anticipating strong quarterly free cash flow for the rest of the year.
And they're maintaining their full-year free cash flow guidance range of $825 million to $850 million.
So even with that Q1 payment, they're still confident in their ability to generate strong free cash flow in 2025.
Okay, so overall, their guidance seems to reflect a balanced approach
to growth and profitability.
They're investing in their future, but they're also keeping a close eye on the bottom line.
Absolutely. Now, let's get into some of the interesting questions that came up during the Q&A portion of the call.
Yeah, the analysts always have some insightful questions.
One analyst wanted to know how much of Twilio's growth, particularly in messaging and email, was tied to the resurgence in the crypto world.
Ah, crypto. Always an interesting wild card. Was it a major driver?
Not really.
So crypto is playing a role, but it's not a major force behind their growth.
Exactly. Their growth is much more diversified, coming from a variety of industries.
Another analyst was digging into Segment's performance.
Specifically asking about that strong deferred revenue build.
They wanted to know if Segment was finally turning a corner.
And if this implied billing strength was related to that big deal Twilio mentioned.
It's a good question.
It's definitely worth exploring.
So what did they say about Segment?
Well, both the reported and current remaining performance obligations,
which reflect their future revenue under contract,
were significantly driven by Segment.
So it sounds like there's some positive momentum there.
Definitely. But what's driving that growth in performance obligations?
Two things. Bookings growth.
Meaning they're closing more deals?
And a higher percentage of new bookings that are multi-year deals.
So not just more deals, but bigger deals that lock in revenue for longer periods.
Okay, that's a really good sign.
Yeah.
Now, one analyst highlighted the impressive growth of Twilio's high-end customer cohort.
The ones spending over $1 million annually.
Right. What's driving that strength?
It's a combination of factors, including new customer wins and expansion within existing accounts.
But it also reflects a growing trend among these larger customers,
They're seeing the value in using multiple Twilio products.
especially when it comes to integrating communications and data.
So it's not just about selling more products, it's about selling more comprehensive solutions.
Makes sense. Now, of course, everyone's concerned about the macro environment.
One analyst asked about Twilio's take on the current economic climate and how it might be impacting their business.
It's the question on everyone's mind these days.
Absolutely.
So what do they say?
Well, they acknowledge that it's a dynamic market out there.
But they haven't seen any major changes that would impact their business at this point.
So they're cautiously optimistic, but they're also staying vigilant and ready to adapt if needed.
They're planning for a neutral macro environment.
Meaning they're not banking on a sudden rebound, but they're not bracing for a major downturn either.
Okay, so they're taking a balanced approach.
It allows them to stay focused on executing their strategy while remaining flexible.
Now let's talk AI.
The hottest topic in tech these days?
One analyst asked about the sheer number of AI customers Twilio has.
And how that translates into revenue.
It's a valid question. A large customer base is great, but how does it impact the bottom line?
Well, they said it's still early days in terms of revenue generation from those AI customers.
So AI is more of a long-term play for them.
For now, yes. Some of those AI customers are still small and just getting started, while others are larger companies experimenting with different use cases.
Okay, so the revenue impact isn't significant yet.
But it's a strategic focus for them, and their early mover advantage in this space could really pay off in the long run.
Another analyst was curious about voice AI.
Specifically, the potential use cases and how Twilio plans to differentiate themselves.
It's a good question because the voice AI market is getting pretty crowded.
You've got players like Siri, Alexa, and Google Assistant dominating the consumer space, so where does Twilio fit in?
Yeah, it's a tough market to crack.
Well, Twilio's focus is on providing the building blocks for businesses to create their own custom voice AI solutions.
So they're not trying to compete directly with those consumer-facing platforms.
Exactly. They're empowering businesses to leverage voice AI in a way that's tailored to their specific needs.
Okay, that makes sense. They also talked about that customer who's using Twilio's voice AI to enhance their IVR system.
Right. It's a great example of how Twilio's technology can be used to create a more personalized and efficient customer experience.
Now let's talk about their communications dollar-based net expansion rate, or DBNER.
It hit 108% in Q4.
Which is a really strong number. It shows their ability to grow revenue from existing customers.
One analyst asked about the factors driving that improvement.
Was it better gross retention or more cross-selling?
They said it's actually more about expansion than retention.
Because their churn rates have historically been low.
So the improvement in DBNER is primarily driven by their ability to sell more to their existing customers.
Another analyst was curious about their cross-selling strategy.
Specifically, how they're approaching the opportunity to convert those single-product customers into multi-product users.
That's a key area for growth.
They're focusing on making it as easy as possible for customers to adopt additional products,
And highlighting the value of using those products together.
like SMS and email or SMS and voice.
Okay, so it's not just about pushing more products, it's about showing the value of those combined solutions.
Exactly. Now, one analyst brought up gross margins, noting that they can fluctuate based on things like seasonality and product mix.
Right, there are a lot of factors that can impact margin.
They wanted to know if Twilio was confident in their ability to continue delivering some level of gross margin expansion as they work towards their 2027 targets.
So what was their response?
They acknowledged that gross margins can be somewhat volatile,
Given the seasonality of their business and the mix of products they offer?
but they're actually planning for relatively flat gross margins over the next few years.
Interesting. Why not aim for expansion?
Well, their 2027 operating margin targets, which range from 21% to 22%, assume those relatively constant gross margins.
So they're not relying on gross margin expansion to achieve their profitability goal.
Exactly. They're focusing on other levers like cost discipline and operational efficiency.
Okay, makes sense. Now, one analyst asked about those $130 million in vendor prepayments.
That impacted Twilio's free cash flow in Q4.
They wanted to know if those prepayments are a regular occurrence.
Twilio clarified that those prepayments are more episodic and strategic in nature.
driven by opportunities to secure favorable terms from their vendors.
So investors shouldn't necessarily expect to see them every quarter or even every year.
One analyst was also curious about Twilio's own use of AI agents within their operations.
And where they're finding the most success.
It's always interesting to see how companies are using their own technology internally.
They highlighted 2 areas where they're seeing significant benefits.
I'm all ears. Tell me more.
First, in customer support,
Using AI agents to handle a large volume of those incoming inquiries.
which has really improved their ticket deflection rate.
So fewer tickets actually need a human touch.
It allows them to provide faster and more efficient support while also freeing up their human agents to focus on those more complex issues.
What's the second area?
Sales development representatives, or SDRs.
They're using AI agents to vet those inbound leads.
That's right. Qualifying those leads before they're passed on to their human SDRs.
So the SDRs can focus their time and energy on the most promising leads.
Exactly. It's all about improving sales efficiency.
Now, for a final question that came up during the Q&A, it's about RCS,
Rich communication services.
which is essentially the next generation of SMS messaging.
The analysts wanted to know about Twilio's progress in the RCS market.
What are they seeing in terms of early wins and the overall outlook for this technology?
Well, Twilio acknowledged that it's still very early days for RCS,
It's been slow to gain widespread adoption,
but they are seeing encouraging signs.
and they're excited about the potential.
One of the challenges they mention is interoperability,
Not all carriers and devices support RCS yet,
which limits its reach and potential impact.
right? It needs to become more ubiquitous for it to really take off.
But despite those challenges, Twilio is ready to support customers who are eager to explore RCS.
They're particularly excited about the branded nature of RCS, which allows businesses to establish a stronger brand presence.
And create more engaging and personalized messaging experiences.
So RCS could be a significant growth opportunity for Twilio down the line.
As adoption increases and the technology matures.
It's definitely something to keep an eye on.
Absolutely. Now let's shift gears a bit and talk about some of the specifics from the earnings call.
Sounds good. Where should we start?
Let's take a closer look at their revenue breakdown.
Their communications business pulled in $1.121 billion in Q4, up 12% year over year.
Clearly, their core communications offerings are still a major engine for their growth.
What were some of the key drivers behind that growth?
A couple of things stand out. Messaging revenue saw a nice acceleration for the second quarter in a row.
So they're seeing some good momentum there.
And their email performance remained strong, fueled in part by the holiday season and all that online shopping frenzy during Cyber Week.
Speaking of Cyber Week, their performance during that period was pretty remarkable.
It was. They handled over 5 billion messages, delivered over 65 billion emails, and supported 678 million calls.
All while maintaining 100% uptime.
It really showcases the reliability and scalability of their platform, which is essential for businesses that rely on them for those mission-critical communications during those peak seasons.
They even got a little revenue boost from political activity, which contributed about 0.6% to their reported growth.
Always interesting to see how those external factors come into play.
It is, but it's worth noting that this was partially offset by a 0.4% headwind from phasing out the software component of their ZipWhip business, which has now fully lapped. Okay, so we've got communications covered. What about Segment?
Let's dig into that a bit more. They brought in $74 million in revenue for Q4, which was down 1% year over year.
Right, we talked about this earlier, but it's worth revisiting. What's the story there? Why the dip?
Well, remember their bookings were actually up slightly year over year, which is a positive sign.
So their bookings were positive.
Exactly. The revenue dip is more a reflection of timing.
And how their contracts are structured.
A lot of those new deals are multi-year, so the revenue gets recognized over a longer period.
So would you say that Segment is on the right track?
I think that's a fair assessment. They're focusing on building that long-term value through those multi-year contracts, and their go-to-market execution is showing signs of improvement. It's just a matter of time before we see that reflected in their revenue growth.
Okay, let's shift gears and talk profitability. Twilio achieved a record non-GAAP gross profit of $621 million in Q4.
That's a 10% increase year over year.
Pretty impressive.
Their non-GAAP gross margin landed at 52%.
Which was down slightly both year over year and quarter over quarter.
It's always important to understand what's driving those margin fluctuations.
So what caused the dip this time around?
Primarily higher hosting costs during Cyber Week.
Okay, they had to beef up their infrastructure to handle that massive surge in traffic.
which can naturally impact margins.
And they also had a higher revenue mix from messaging, which typically carries lower gross margins compared to some of their other products.
But if we zoom out and look at the bigger picture, they still achieved a record non-GAAP income from operations of $197 million, a 13% jump year over year.
So they're doing a good job of balancing growth with profitability.
Precisely. And they're accomplishing all of this while also driving down their net burn rate and reducing their outstanding share count.
Those are all positive signs,
Yeah.
experts. So we've spent the last two parts really getting into the nitty-gritty of Twilio's Q4 performance.
Their financials, their strategy, those ambitious plans for the future.
Even tossed around some creative trade ideas.
That Switzerland of AI play, huh?
Hey, you never know. But now let's bring it all home.
Wrap it up with some final thoughts for investors.
So if you're listening, thinking about Twilio, what's the big takeaway? What's the headline?
For me, Twilio is a company that is executing,
Not just talking a big game.
delivering real results, and setting themselves up for success.
Especially in a market where that's not always easy.
There's a lot of uncertainty out there.
And their commitment to profitable growth, that's a differentiator
Big time. It shows a maturity, a discipline.
that a lot of companies, frankly, are still searching for.
And their bet on AI. That's a smart move.
They're not just riding the wave, they're building the surfboard.
Becoming the platform that powers these AI-driven experiences.
And that early mover advantage, that's valuable.
Could pay off big time down the line.
Now, it's not all sunshine and roses.
Gotta be realistic.
There are risks, there's competition.
Macroeconomic headwinds, always a factor.
But Twilio seems to be approaching all this with their eyes wide open.
They've got a strong balance sheet, diverse customer base,
They're innovating constantly.
which gives them a solid foundation to navigate whatever comes next.
So the million-dollar question,
Should you invest?
well, that's ultimately up to each individual investor.
Gotta do your own research, assess your risk tolerance.
But if you're looking for exposure to these massive trends,
AI, cloud communications, the whole customer engagement space.
Twilio's definitely worth considering.
A company to keep on your radar, for sure.
And that wraps up our deep dive into Twilio's Q4 2024 earnings call.
Thanks for joining us on Talk Tickers.
We'll be back next week with another earnings breakdown.
Until then, happy investing, everyone.